Hi, everybody. Welcome to FACE. Hope everyone's doing okay. Here we go, Himanshu and Angie. Good morning. Okay. I want to welcome our viewers from investing.com. Louise, how are you? Whole community, let's have a great day. So we know what's happening the next couple days, right? Jackson Hole. And don't ask me, I have no idea why they named that city after Michael. Okay, so we should we should get some commentary out of Powell. And I just want to help those that are mainly stock investors that are worried about risk on, risk off, what they need to pay attention to. You could pay attention to earnings and you could pay attention to yields and inversions. But if you really want to know what's happening in the trade war and risk on, risk off, and this is for investing.com viewers, you need to have this up on your screen, US dollar won. Okay, this is going to give you the real picture about whether you should be long risk or in cash. So as you can see, the S&Ps came off pretty good last night, and they did because of this. All right, so this was the kickoff of the correction in the stock market, and just like the S&Ps have been consolidating for almost a month now, the same is happening in the yuan. It's my contention that eventually we're going to make new highs. If you look at a long-term chart, you can make a case for higher highs. If you look at things like momentum, you have a confirmed high. Markets rarely peak when price and momentum are confirming, right? So with Powell speaking, maybe we could get one more little pullback here. As long as we don't close under the breakout, this is a breakout here, we could retest it again, and that would give the market plenty of jet fuel. I don't think that's going to happen, but I think we could at least get a little pullback, a little relief, a little hope with Powell. And so now you guys know what to follow. It's USD CNH. If you're trading stocks, it should be on your watch list to pay attention to it. US dollar won going up means weakening yuan, not good for risk. And it coming down is good for risk. Okay, that means that there might be some type of resolution to what people were at first discounting. Oh, it's no big deal. We're not large exporters here in the US, but now the narrative has changed to the global slowdown is affecting us, and president talking about payroll tax cuts and the word recession being used. God, I haven't heard it being used in the media for a real long time. And now that's all you hear. It makes me want to be bullish, but I do think there is a correction coming in the S&Ps, that the low that we had here is not going to hold. But markets are mean, and me, Mr. Market, knows there's a lot of people that are short and they have their stops over this high. So it's been my contention that before we do turn down again, maybe we go 29.60, maybe 29.80. I don't think we're going to see a new high. You could make a case that there could be a new high just based upon this formation, either from here to here would take you above 3,000. I'm just looking for a little impetus because I do believe that the USD won is going to at least 7.25. So I'll be looking to fade any strength that we have as a result of Powell giving the market what it wants and sounding very dovish here in the next couple of days. Everyone with me? Any questions? Thought I had a failing rally working in the dollar. It still could be, but you're going to have to throw in the towel over the high here at about 98.45.50, except that 78.6 back here. So this is a tough call. It held where it had to initially. I still think that there's a possibility if the market sells off that it used to be a weak dollar was good for risk. But I'm thinking since we saw this in August, weak dollar, weak market, that we could, if we get a sell-off in the market, we could get a sell-off in the dollar as well. So looking for that. US dollar yen, still in this ascending triangle. Needed to close over 107. That should give us, Paulie had 107.80. Actually, the measured move would be up to about 109 if that happens. I've been talking about crude. Yesterday, I said I was short from 680, covered a little early at 611. It's trying to hold back under yesterday's lows. I think you have some problems in crude. But if you see it, if you look at it, it looks a lot like the S&P. So, you know, we get through this moving average, we could get back to this descending triangle line here on the big pictures. This is your daily 58. And I know an Elliottician that says, you know, if we don't break down from here, we could go to 61 again and then fail. So, you know, either sell it against the line or wait for a breakdown. And speaking about breakdowns, it was one of my better calls last week was a short side of Euro pound, and it's trying to hold this 90 level here. Under 90, it measures 89 to 88 and a half. So that's your daily. Maybe we could get one more rally, see how it held right on the moving average. And I was looking for some type of shoulder. We didn't even get back to 92, but if we get one more rally up here, 92, 92 and a half, I'll try it. And the measured move 90 to 93, 91, 93. Yeah, it gives you 89 down here for a potential target, which really wouldn't interrupt.
88 and a half, coach, is quite an important level for the market.
What is?
88 and a half.
Oh, okay. Thanks, Stephen. Steve's going to be he gives one of the best overviews of the market. I just lay out a few ideas, but, you know, we have a little company business to take care of before I pass it over to you, Steve, because, you know, one of the guys that I admire in the business because he really paid it forward. I've talked to so many people because I've done well over 1,000 interviews with traders and know a lot of people in the financial Twitter world, etc., that have given Blake Morrow credit for teaching them methodologies that have been game changers for them. And it's his birthday. So I think everyone that he's come in contact with in the industry and probably his buddies in the Marines, and I know what kind of family man he is glad Blake was born. I am. So anyway, my guitar is really out of tune because I dropped it, but let's all wish Blake a happy birthday. Here it goes. Happy birthday to you. Happy birthday to you. Happy birthday, dear Blake. Happy birthday to you. I hope it's a great year. Next year, I promise, Blake, I'll tune my guitar up. But,
you know, that's how I feel about my body right now. I'm all out of tune. So thank you very much.
Happy birthday,
hey, thanks, Steve.
I hope it's your best year ever.
Thank you.
All right.
I'm actually, you know, it's interesting. I'm feeling my age today. I don't. You know, I played tennis the other night, and my knees feel like my age. Like I must have jerked around a few times. You know when you're playing tennis and you're just like you're moving.
The peanut gallery wants to know how old you are.
47. I thought I was 48, but I'm 47 apparently. So
that's
47.
Yeah,
Blake,
47. Yeah,
good man.
Since you have a half Greek wife, and I know that you like, I haven't watched it as you know, but you keep mentioning it all the time. My fat Greek wedding.
Yeah,
I'll tell you some interesting piece of information, because ancient Greek and whatever any word means is has quite importance. The day that we're born is called Genethlia, which comes from the words geno to Sathlos, which means it's the day that gives birth to Stelio. Help me with Sathlos. Stelio?
Yeah.
He's
like, why would you ask me that?
No, I'll tell you, it's important. It's the day that gives birth anyhow to whatever you have to achieve in life.
Oh, to a mission.
Like the Hercules. How do you?
Like a feat, basically.
Yes.
FEAT.
Now the rest of our life is the rest of our life is called vios, which comes from the word via, which comes from the word violence, which means that you have to push through to go through life. You know what I mean? You have to exert violence, not in a bad sense, you know, in the sense that, you know, you have to put the effort in that sense.
Yeah, I've had my teeth kicked in a few times.
So I think, you know, that the fact that you feel your age today is a testament to that.
All right, that's I'm going to look at it that way then.
What
Thank
a great lesson in Greek today.
Right. Well, thank you very much. It's you know, it's I don't. It's funny. My neighbor is born. His birthday is today. We just had my son, whose birthday was 3 days ago. His best friend moved in just down the street. His sister's birthday today, and my nephew's birthday is today. So there's a lot of, and I have another friend in California that I've known since we were 13. I was 13. 11. His birthday is today as well. So there's a lot of birthdays today. And fortunately, I can be here. I'm looking forward to having another year. So anyway, thank you guys. Appreciate the well wishes, and let's just hope we can make some money today. And you know, one of the things, speaking of making money in the FX market, and thanks guys for all the birthday wishes. For those of you that are wishing me a happy birthday, and some of you said I'm young. Yeah, 47 years old. I don't feel that I'm older, but I am. You know, my kids are now starting to say I'm not cool. So there's that. You know, you know when you think you're cool and then you're not.
It's not
cool.
just your kids, Blake.
I know it's, but my kids definitely don't think I'm cool anymore. So that's a scary age. Maybe it's because I shop at Target for clothes. Maybe that's it. No, I'm joking. I'm going out for a nice dinner on Saturday with some friends and going out drinking and celebrating. And I'm like, ooh, I need to go buy something to wear. Actually, so let's see if we can make some money, because Daddy needs a new pair of shoes. So, you know, with the euro, I've been looking around for this for a double bottom. Well, we might actually have a triple bottom now, and we had a little false breakdown below these lows, and then Macron and Boris Johnson had a little press conference, and that, you know, created a little bit of a lift right off of these lows. And you can see the euro might have had a false breakdown, which as you can see, I've had an alert set up here at 111.15 for days now. And because I was looking for a double bottom, but we might actually have a triple bottom. So, but we need to break above, let's just call it 111.20. And the chances of us doing that ahead of options expiration today at 10 a.m. Eastern is very slim, and the risk of us breaking out ahead of you know, the Jackson Hole symposium, I don't know if it's going to be able to do it. However, before you get too unexcited about what's happening in the markets, and you go, well, what am I even doing here? Why, if the euro is not going to move? The one thing that's happening right now is boons, and the boon market is actually reversing pretty aggressively too. You can see boons are selling off. So German bond yields are going up, and that should help the euro dollar higher. So, and the euro's grudgingly moving higher. It's not really exploding higher like I thought it would, with the boon market breaking down. And if you didn't know that was happening, well, you know, if you look at you know, our analysis on ForexAnalytix, and you look at the boons, you know, like intraday update, the boon is at triangle support, so bulls should be very careful here. A break of 177.45 would be bearish, and you know, you got notified before we broke down, and now we're breaking through that 45 level. So the boon market is actually looking like we might pull back a little bit. Now, the crazy thing is boons have been extremely bullish for quite some time. So this reversal could actually get some legs, and that's one thing you have to consider while you're trading the euro, because we've had such an explosive move higher. There is a risk that that boons actually start to reverse, and put a little bit in the euro. Now, does that mean the euro is going to 115? Probably not, but could that put the euro dollar back at 111.50, 112? Yeah, I think that's entirely possible, especially if yields continue to move higher. And it's not just boons. Take a look at the bond market. Here's the 10-year yield, just to give you a better view of the 10-year yield. The 10-year yield is also bouncing pretty aggressively. All right, so if you look at this as being the inverse of boons, right? You have bond market yields are rallying. This is the 10-year, so the 10-year treasuries. You got yields are moving up, which means that the euro yen is probably a decent candidate for a move higher. And the dollar yen, by the way, the dollar yen has been capped. Let me move this trend line here. The dollar yen has been capped right here, and frankly, if the dollar yen breaks above 106.70, we're going to start to squeeze. So keep that in mind when you're watching these yields move higher across the board, and it's probably going to support equities to a certain extent. The S&P. Remember, we're at the end of the week too. S&P. I've been trying to play on the short side here. Matter of fact, I'm probably going to have to cover up my shorts because I'm a little worried that if the dollar yen breaks above 110.70, or I'm sorry, 106.70, that yields are going to continue to rally and stocks are going to break higher, and we might have a situation where let's take a look. This is the S&P. I want to do a little bit longer term view of what the S&P may look like, and Andre's not here, but I'm sure he would concur. We could do this. This is the S&P, guys. A, B, say roughly. You can go 618, which would be somewhere around here, right? C. This looks like a realistic expectation for the S&P. The S&P this would be a Garley pattern, and we could take us back to almost 3,000 on the S&P.
It's 2987, Blake. I'm here. And
look at that! You're here, Andre.
It's published that Gartley pattern. Yes.
2987. So yeah. Right.
It's a 127 extension from the first bullish leg from below, from the bottom. Right
there.
Yeah.
Basically. Yep. Okay. All right. I'm with you. So, thanks for chiming in, Andre. So when you have a situation like this and you got yields that are moving higher, you got almost across the board, you got to be very careful with the S&P shorts at this point. And like I said, I think we could very easily rally to close to 3,000, or maybe, as Andre said, maybe within 10 handles, 10, 15 handles of there. So just be careful if you're short risk with the price action in the bond market. Another thing is pay attention to the cable. The cable knocked its head up against the 181.80, 121.80 level once again. Stelios, if you're here, Boris Johnson, he was doing a press conference with Macron. It seemed like it was a pretty civilized, I guess I should say, civilized event. Any takeaways from there?
Actually, no. I mean, it seemed quite constructive, but we've seen this a million times. It's all talk until something actually concrete happens. So the market kind of liked it, but as you can see, the euro sterling went below 91, and it's jumping back again above. So I think we shouldn't yet make any decisions based on this. I don't think, not yet.
Okay, all right. So, and I know they were still talking. You know, obviously the you know, backstop Irish border. Nothing. It didn't. It sounded like at least the conversations were constructive.
There is a conversation, which is the starting point. Yes.
Yeah. Okay.
That's what the market likes so far.
Yeah, and really, you just got to watch the cable at this 122 level, and you know, we start breaking above 122. That is probably that could be an indicate. You know, it could be one of two things. I mean, it could be, you know, pound positive, but you also have to keep in mind that this might be dollar negative. It might be more of a dollar move, and I'm a little skeptical of dollar strength up here, as you guys know. If you look at the dollar index, we're struggling against these April, May highs. I think it's April, May. Yeah, April, May highs from this year. These spike highs, this little double top that we had that produced a really nice double top extension. We're really struggling at this level. So, you know, the cable could make it above 121. The euro could be back above 111.20, but it could be just more a dollar move versus a constructive pound move. So, I think if you want to know if, and you just said it, Stelios, so I'm just going to reiterate what you said. If you really want to know things are positive in the UK or whatever development is happening, the market is going to translate that by selling the euro pound. So you're going to see the euro pound well below 91, probably below 90 if it's really positive UK Brexit news. We could very easily get the pound dollar at 123 and the euro dollar at 112, and the euro pound still is trading at 91 pence, right? So try not to get too excited about the cable as a whole unless you see the euro pound. Where is it? It's down here. You see the euro pound really start to break down below 91 pence, or, you know, 90, 80, 99, 90, 85, somewhere in that neighborhood. All right. Okay. So just a couple of things that I'm looking at. Also, silver and gold are looking a little weaker, but if the euro, let's talk about the euro for a second. If the euro rallies back above 111, the gold downside is probably going to be limited. So in other words, if you know, because gold and the dollar have a very inverse relationship. If gold, you know, pulls back to this 38% retracement, which is, you know, probably pretty important support, and the euro starts breaking above 111, I would not want to be short gold. Gold's probably going to, you know, trend higher with a move lower in the dollar. More times than not, the dollar and gold are moving inversely of one another. So that's something to keep in mind. One of the other things that I guess I need to point out, and maybe Stelios can talk a little bit more about that, is that we had the Eurozone PMIs come in stronger than expected. And you can see universally across the board, the Eurozone PMIs came in stronger. The euro did spike up right into 111 and then reversed back to lows real quickly. And when I got up this morning, I'm like, oh, that sucks. You know, we got the spike up into resistance and then we came right back down into support. I know it's just being range bound, but the Eurozone PMIs for once are starting to improve. So that's a positive sign. Do you have any comments that you'd like to add to that, Stelios?
Yes, I mean, it is a positive sign, although we have to look at the absolute levels. Like German manufacturing PMI is still 43.6. So even though it was a little bit better than expected, still, you know, a very bad reading.
Far away from expansionary territory.
Yes, and the other interesting thing is that services PMI in Germany and other countries are doing quite well. So in Germany, it's 54.4, so well into expansionary territory. So manufacturing is lagging quite a lot. Services is doing well. As I said in the chat room earlier today, we have to ask ourselves what leads the way usually, and you'll find that usually it's manufacturing that leads the way. So yes, you will get a few beats here and there, but I think the overall picture in Eurozone is not good yet. It's not good yet.
Got it. Okay, and one last thing, and I'm going to turn it over to Steve. You know, when I look at the euro, it's not just the euro dollar. I look at some of these commodity currencies too, and one of the commodity currencies that I've been very bullish is the euro New Zealand, and the euro New Zealand had this pennant, all right, and we're actually breaking higher out of the pennant right now, and I was hoping for another dip down to 172, but we're actually starting to break higher, and that's a risk if you're a euro bear, that you've got some of these currencies, not the euro pound obviously, because the pound is it's more pound related I think at the moment, but like you've got some of these other cross rates that are actually looking pretty well bid. So just keep that in mind if you're trading the euro dollar, that you got some of these euro crosses that actually look constructive. All right. So Steve, good morning. How are you?
Good morning, Blake. I'm good. There is a question for you, by the way.
Go ahead.
Specifically targeted at you. Blake, is your preference Kiwi over CAD and Aussie? That's the question from our friend Ben.
It's for a long or a short, I would say for a short, I prefer Kiwi shorts over Canadian and Aussie at the moment. One of the charts that I'm really focused on, and I'm not trading at the moment, is this Euro Canadian, or I'm sorry, New Zealand Canadian. New Zealand Canadian is below a multi-year trend line, and this you have to go out to a weekly chart. Let's do it like that. You can see we're actually breaking lower, and this is pretty scary if you're long New Zealand dollars. And you could see the Aussie New Zealand is above 106. The New Zealand dollar is obviously trading heavy. New Zealand Canadian is trying to break down below this, multi-year trend line. So I think for now, a Kiwi shorts are going to be preferred, and like I said, you saw the Euro New Zealand starting to show a nice bid, so I think you got to keep an eye there. But with any type of risk aversion, which is not today, but any type of risk aversion, we would see the Aussie and the Canadian come under assault, very similar to the Kiwi as well. So that's something to keep in mind. But right now, I think the New Zealand dollar looks like the weakest of the bunch at the moment.
Yeah, and I was showing yesterday, Blake, the breakout in the Aussie Kiwi. So that also shows that Kiwi should be underperforming the Aussie, at least in the short term, because this move lower, if you exclude the spike low to take out the lows, which probably took out every long position in the market, was nicely channeled. Yeah, and we got that nice breakout. So I do think that there is a good potential for more upside here as well. So that should imply that the Aussie is also going to overperform the Kiwi, at least in the short to medium term.
I could agree with that. All right. Well, Steve, I'm going to pass it over to you guys. I'm going to go enjoy my birthday.
Okay,
not really. I'm going to. Thank you. I'll be in the chat room. I'm just
Happy birthday.
Thank you, Stelios, and thanks, Coach, for the wonderful, beautiful, untuned song. All right.
Welcome, Blake.
Okay, we have some numbers actually.
We have initial jobless claims, correct, sir?
Yes, and also manufacturing and services PMI out of US. So something interesting.
There we go. 216 expected. 1.7. Yeah. Okay.
I don't think ahead of Jackson's Hole any data is going to really make a big difference unless it's a huge beat or miss. So
I totally agree, Stelio. I think that the only way the market is going to move from something like initial jobless claims is if it's a huge outlier.
Yeah.
So for example, if we get something, we expect like 216. If we get something like 50, or something like 350. Otherwise, I very, very much doubt that the market is going to care about what's going to happen with this data.
I agree. And okay, we have 30 seconds to go. Anything else to note?
No, let's wait for the data, and then you'll tell me if there is anything else before we go to the charts.
Do you guys know why they named Jackson Hole after Michael Jackson?
Yeah, I bet that's how they named it. Yes.
We won't take that joke any further.
Let's see.
Okay, so 5 seconds to go.
4, 3, 2, 1. Come on. Let's see what we get. There we go.
We had some Canadian
yeah.
numbers as well.
Okay, more or less Canadian wholesale trade double than expected, but revised somewhat lower than having to do with initial and continued jobless claims as expected. I mean, the difference from expectations is very, very minor. So, as you said before, Stelio, I doubted that there's anything that's gonna be moving from that. Let's just have a look at the USD against the Canadian. Whoop, wrong language. To see if we have any kind of a reaction. Yeah, somewhat USD CAD, somewhat lower, but nothing to write home about. So, Stelio, anything else from the macro fundamental?
We actually talk about everything, UK and the PMIs and Jackson Hole. So I don't have anything else to say, I'm afraid. It's been a very, very quiet morning.
Indeed. Generally, the past few days have been somewhat quiet. I mean, we've had a bout of volatility during the past couple of weeks, and it seems to have calmed down somewhat so far. Coach, any specific requests?
Well,
the
market's not going to be back to full steam until after Labor Day, but we only have like a week and a half. And so they wait for major events like what Powell's going to say. And everything in between is just, chop, but lower your expectations until after Labor Day. That's what I say. Scalp around.
I agree with you.
Definitely not the time to be aggressive, in my opinion. Markets are too thin. Tape bombs can just blow through stop levels in a heartbeat.
Yes, especially with something like Brexit pending and having Trump as a president, that we know that at any given point, he can tweet out something that's going to be market moving.
Oh, September and October are going to be dynamic trading months, I believe.
Oh yeah, absolutely. And I think it's a good reminder here, Coach, to repeat what we've been saying for a long time, that it seems still, it doesn't seem so obvious, but we've been saying that since we had this initial spike back here at the very, very beginning of 2018. If you remember, I kept saying back then that you can forget about volatility going back to the teens during this business cycle. And, I'm a very, very big believer of that. I've even put a bet with our friend Ures about it. I told him back then that, volatility is never going back to the teens during this business cycle. And it's a very slow and, subtle so far divergence. Yeah. But as you see, volatility since then have been producing higher lows.
Yeah, with all the higher highs in the market, that's really a market tell. We haven't made new lows.
Exactly. And I don't think we will. Not during this.
Me either.
Yeah. So I do think that, we've been, since the beginning of 2018, we've been going through the beginning of the end of this business cycle. We're on our way to the next recession. And that's not something that, we started talking about a couple of weeks ago, when suddenly all the media found out, that might actually be a possibility. Yeah. We started talking about it last year, that, after the last fiscal stimulus Trump provided, which in essence gave some life back to a market that was ready to roll over around the time of the presidential elections. Now the market is running again out of steam. It's a very, very mature business cycle. And I do think that, it's a matter of time. They will do their best to push, the upcoming recession to the end of next year. As I was saying since months ago, I think that it's going to be tough to achieve something like that. It's not out of the question, but I give it less than 50% chance that they're actually going to succeed. So I do think that the season that is starting, I consider a season, the beginning of September, when everybody comes back from vacation, until, next summer. So I do think that we're going to have a very, very interesting season ahead of us. And, you know, it's for people that have been patient, I think that it's going to be extremely rewarding because, as we know, when volatility comes back, first of all, when we get sustained volatility in the equity world, that is definitely going to spill over in the FX market as well. There's no question about it. When we start getting like big moves in stock indices, first of all the safe haven currencies are going to start making big moves, like the yen, like the Swissy, perhaps less the Swissy, because we know that the S&P is going to be doing their, you know, their best to, you know, to keep it from appreciating too much, but still we should be having like moves there as well, and that's going to spill over obviously to commodity currencies, which are going to be the first one to suffer. Needless to say, to emerging market currencies, that those are going to be the first ones to be hit. And you know, then we're going to see what kind of a position in the risk to safe haven spectrum other currencies are going to take, which, you know, it's not very easy to define yet. I mean, it's a big question mark what's going to happen with the euro and what's going to happen with the pound. You know, a lot is going to be dependent, having to do with how the pound performs under such circumstances. Usually, under normal circumstances, when we have big risk of moves, usually the pound is performing more as a safe haven currency. It's not exactly safe haven currency, but, you know, in the spectrum, let's say from you know, to risky to safe haven, it performs more in the side of safe haven. But, you know, if a Brexit is looming, or if it happens after that and we've had a Brexit, a disorderly Brexit, then you never know. I mean, it might at least for a period of time behave more like a you know, like a risky currency than anything else. Also,
that S&P chart that you're showing, Steve, looks like even if we go to Andre's target up there, 2890, could be a right shoulder. And the two pictures that you're showing speak 1,000 words. The VIX was like a year and a half of accumulation, and this S&P is like a year and a half of distribution.
Yeah, absolutely, exactly as you said it. And that is why I also believe that obviously this is a very prolonged bull market. It can still move higher, but I think that, you know, trying to be long so late in the cycle is probably going to be prove to be what they call collecting pennies in front of the upcoming train, right?
Yeah.
So I'm actively looking for opportunities to be short. I was short before I left for a vacation at 29.30. I took a little bit of profits there, and I'm actively looking to be short again. There is a good likelihood that I'm going to sell a third of that today. Later today, I want to see, you know, the first few hours of trading, and, you know, give myself the ability to sell higher at 29.60.
Yeah, let them take the stops out first, right, bro?
There is a possibility that they're going to try to take 29.60 out, you know, push it towards the 78.6 at 29.72, even a little bit higher.
Well, at least a 45 stop or 43.
Yeah, absolutely. But I will be gladly be building a position here. Blake mentioned the USD yen before, and you know, this is what I have for the USD yen here on the 4-hour chart. Let me be very clear. I know that you see that I've marked an inverted head and shoulders formation, which is obviously you know, a bullish reversal pattern. But you need to be very, very careful because, yes, there is not a very good looking, but there is an inverted head and shoulders formation here on the 4-hour chart in the USD yen. But I still believe that it's not going to be easy for the USD yen to turn really bullish. I mean, can it break higher from here? Yes, it absolutely can. But I do think that even if we see an initial move higher, which of course will go hand in hand with, you know, a further rebound in stock indices, as you mentioned before, Coach, perhaps taking out the stops, as you said, I will still be very, very skeptical about the fate of USD yen here. I don't believe that the USD yen is set to, you know, put like a long-term bottom here with this inverted head and shoulders formation and, you know, start moving higher towards new highs. So I do think that until proven otherwise, any decent rebound in the USD yen will likely find fresh selling interest. That's what I think. Now, having to do with the DXY is a mess. Let's have a look at it on the daily chart. Actually, I haven't really updated the 4-hour chart because there is nothing to update. I mean, the daily can give you the whole picture once again, and it's the same thing I was talking about before I left for vacation. The first time I went to vacation, nothing has really changed. I mean, it's been slowly drifting higher within this slightly ascending wedge, but we have broken and we remain below this ascending trend line support. So as long as we remain below the high at 98.93, I wouldn't find it surprising to see a move lower here in the DXY. One thing is for sure, the DXY is not in a rush to go anywhere fast. We've seen that, and whoever has been making big bets that the dollar index is going to move fast one way or the other, they've been literally chopped up by the market. So until we finally see a legitimate breakout, which would mean either a breakdown from, let's say, 96.30 or a break higher from 99 almost, I think that you should be quite nimble with any positions you want to be taking here. Now, having said that, let me go through some of your questions. Yen generally looks like a great sell from here. Fundamentally, would be good to see S&P die. However, technically S&P is bullish still for me. Yes, it is bullish until proven otherwise. I agree 100%. But there are a lot of clouds gathering up in the horizon. Even the financial media, which are extremely laggy, have started realizing that things are not so rosy. I mean, until a few weeks ago, that's what I was writing earlier today in the chat room. They were touting, how great this economy is, and suddenly they woke up on one day and realized, oh, we have an inverted yield curve, and we start getting some data that don't look good. Perhaps the economy is not that good. Of course, the economy is not that good. The global economy is in a terrible, terrible state, and central banks are doing their best. Their collaborators is one of the biggest distractions that we've seen in the history of economies, because in essence, with their behavior, they enable governments to be 100% imprudent. So, every time the central banks run for the rescue, they inflate even bigger bubbles. They make the problem even bigger because the problem is one and one alone. The problem is that since decades ago, globally, debt has been going higher, and instead of going through the usual remedies that capitalist economies are going through, we've in essence put a roadblock to capitalism, and we prevent the market from correcting the imbalances that have been created. So in essence, we make the problem bigger and bigger, and the central banks are trying to fight fire with fire, and eventually I think this is going to lead to like some tectonic changes. I do believe that the credibility of the central banks are going to be completely destroyed within the next few years. By few years, it might end up being like 10, 15, but I don't think it's going to be like a lot longer than that. And I do think that that's eventually going to lead to huge changes in the monetary system, because very basically, it's the path we're on is completely unsustainable in the long term. Of course, this is not something you can trade in the short term, just making conversation. Question about the euro kiwi could go in the next. Yeah, Blake did show the euro kiwi, but he didn't show the euros. So I wanted to show you both because I was monitoring them on the 4-hour chart, and they're both attempting. Blake already showed the euro kiwi. As you see, more or less the same deal is true for the euros. There is a good chance that the euro has broken higher. How are we going to confirm? We should, if that's the case, we should hold a retest of like 163.30. I wouldn't want to see a daily close below that level. If we do hold there, from a risk-reward perspective, you know, it's a great possibility to see higher levels. Keep in mind that in general, Euro Aussie, Euro Kiwi have been performing well when we have risk-off conditions. So it's not coincidental that, you know, today they're moving somewhat lower so far, but this is something to keep in mind. And here is Euro Kiwi. Blake already showed it. We had quite a parabolic move higher. Then we had a period of consolidation, and we seem to be breaking above this recent period of consolidation. As Blake mentioned, this looks like a pennant. Even if you have a look at the RSI is going to show you more or less the same thing. We got a breakout from this RSI trend line. Okay, so Euro Aussie, Euro Kiwi, for the time being, in the short term, they look like they might be ready to you know, to make and, you know, to start another leg higher. Now, pound Aussie and pound Kiwi, in case somebody wonders, not that clear of a situation. I've marked in both of them on the 4-hour chart, as you see. A trend line support here is the pound Aussie, and here is the pound Kiwi. Pound Kiwi rebounding somewhat better because, of course, Kiwi is underperforming the Aussie. But so far, the rebound in the pound Aussie and the pound Kiwi, as you see, definitely looks more corrective than anything else. So, you know, there is a good chance that that's going to prove to be the case if we get some big sell-off in the pound, which is always a likely scenario. I mean, we know that the next few weeks are going to be, you know, super crucial for what happens, having to do with what kind of a Brexit we're going to have. In my opinion, there is, not in my opinion, I think the market in general agrees that there is now a high probability that we're not going to get a, you know, pretty looking Brexit. So if that's the case, you know, even with Aussie and Kiwi underperforming, we can easily end up having a big move lower for the pound Aussie and the pound Kiwi. So, you know, in essence, you know, this can move to the downside. Of course, it also all comes back to having to do with pound. Blake mentioned that as well. What happens there having to do with Brexit is going to mostly produce itself here in this pair, the euro pound. Euro pound reacting very nicely so far. You can see it here. I mean, we got a rejection from that channel. We had a little overthrow, got rejected. And this is today, so far, the 5th consecutive day that we're trying to test this 91 cent area, attempting to break lower from it. Now, will we do that? There is a very good likelihood that we will. And, you know, my focus is at 89.50. You can see it here, next area of support. If you project this broken channel's resistance, it also passes from there. Roughly, you can see it. This is the long-term view of what has been happening with the euro pound. So, you know, a revisit of 89.50 before rebounding higher is very likely. Of course, somebody can, you know, from a risk-reward perspective, it's appealing to be long here against 91. But, you know, 5 consecutive days of consolidating without really being able to rebound strongly from here, from this level, makes me very, very, very skeptical that euro pound can, you know, simply rebound from 91 and move to new highs. It's not unlikely, but I would be looking for a lower low before higher levels from there. Okay, so euro pound is quite clear here. Let me go through some of your questions. Kiwi heading, says Ben, for 63.47, low of 2016. Okay, let's have a look at both the Aussie and the Kiwi. So here is the Aussie. This consolidation really doesn't look that bullish to me. I wouldn't exclude the possibility of another little rebound higher, but I also find it extremely likely that since we've been banging our heads on this 68.30 resistance area, being unable to penetrate through it, there is a good chance that we're just going to continue lower from here without even another bound prior to that. And having to do with the Kiwi, since you mentioned it, Kiwi breaking lower from here, you can see this horizontal support area was quite important for the market. And the next area of support is the 127% extension at 62.76. Now, 62 was the 2015 low. It's also, as you see, the 141.4% extension. I know that in the short term, Kiwi is quite overdone to the downside. I mean, you can see it on the RSI here. RSI is has more or less remained below 30 for a period of time. But, you know, overly weak readings are proof of direction and not a reason for you to try to trade something. Now, of course, divergences in the RSI in combination with other factors like, you know, confluence of supports or whatever are, you know, nice signals to try to trade the reversal. But, you know, so far, I'm not seeing a reason why somebody should try to fade this, not until or unless we get some big candlestick reversal in combination, as I said, with other factors. Until that happens, the path of least resistance indeed remains lower in, you know, for the Kiwi, and I think that, you know, you should respect that. A lot of happy birthdays for Blake. A lot of happy birthdays for Blake. What do you think about the tax cuts that Trump suggests? That's a good question. I think it's a move of despair. Trump is going to play. He's going to be all in for, you know, in his effort to push the recession, you know, for like 15 months. So yeah, he might deliver something like that. Keep in mind that not only the best economy ever is in need, according to Trump, of extreme monetary stimulus, because, you know, there is no doubt about it. The US still has negative real rates, right? I mean, they hiked rates to like 2.25, but inflation is north of that. Real inflation is definitely north of that, but even measured inflation is roughly that. So keep in mind that real rates actually barely exceeded 0%. So we still have extremely accommodative conditions from monetary policy. And also keep in mind that we have unprecedented fiscal stimulus. How do we know that? Very, very simple. It's still August, and the US deficit has already surpassed, the official US deficit has already surpassed last year's whole year deficit. Okay, so we're talking about this year's deficit is, in my opinion, is going to be probably north of 2 trillion. Keep in mind that 2 trillion is roughly a 10% deficit. And I'm talking now about the real deficit, because keep in mind that the US is reporting a deficit. For example, the reported deficit last year was like something like 800 billion, if I remember right, 780, something like that. But the amount of money that was required to fund the US government was almost 1.4 trillion. How do we know that? Very simple, and you know, it cannot be doubted. It's the amount of money that the debt increased by during the year. So because, you know, the US marks a lot of items as off-budget items. But, you know, the off-budget items have now become almost, you know, as much as the on-budget items. Not exactly, but another like 60, 70% or whatever it is. So if the official budget is on its way to roughly 1.2 trillion this year, adding the equivalent percentage of off-budget items, according to what we've seen during the past few years, that's going to be 2 trillion. And that's before officially going into a recession. If we do officially go into a recession this year, you can expect, as I said, that the actual deficit, which is the money by which the debt is going to increase, is going to be north of 2 trillion.
Steve, sorry to interrupt. I just want to say we had some comments from Merkel about
That's interesting.
basically about the UK. She said we can work on finding a regime that keeps the Good Friday Agreement and also ensures the integrity of the EU, and also that there can be a solution to the backstop by the 31st of October. So the market, if you have a look at the pound, any pair.
Actually, yeah, euro pound, exactly. That's what we were saying before, Stelio. It looks, if you remember, I was saying that it looks like the market is not going to be able to hold 91 cent, and we should have another lower low. And indeed, as we're speaking, based on those comments, we have two events happening here. One, you can see here the cable breaking out from this trend line support. So it's now on its way to what is a very crucial resistance that defines a downtrend, which is 123.73, whatever it is. And the euro pound is breaking below 91 cents, which puts it on the way to 89.50. Very interesting stage. So definitely a positive node from the European Union. Boris Johnson.
We have to take it with a pinch of salt, like you very correctly said yesterday. Merkel is on her way out, and she's always been like a peacemaker.
Conciliatory, yes.
So, but still, it's important words coming from the head of Germany, so we can't ignore them.
No, absolutely. So very interesting, and let's see if that's going to give legs to the cable. As I said, from a technical perspective, breaking below 91 in euro pound opens the downside. Also breaking above this trend line resistance here in the cable. Let me zoom in so you can see it better. There it is. Opens. I had two probabilities here. One, we go straight lower from there towards the 161.8% extension. Second, we break above this trend line, in which case we revisit 123.73. So if we do close on the daily above this trend line, I do think that we should be retesting 123.73 within the next few days. That's another 170 pips of upside. Now, if we do break above 123.73, that's going to be the first step. Now, I'm moving ahead, of course, of events, but assuming that that happens, which is a big if, that's going to be the first decent break above a resistance of importance in a long time for the cable. But let's first get to 123.73, and if we do break above it, then we can start looking the pound pairs in a more constructive way. Until that happens, don't be overly enthusiastic, because I remind you, we've had plenty of false starts for like an upcoming rebound in the cable. And in all cases recently, the first significant area of resistance was always enough to reject price action and, have, pound pairs continue on their way lower. Okay, interesting. By the way, as we've been speaking, the Kiwi has been really taking a dive. Let's have a look at it on the 4-hour chart. As you see, the Aussie is also trading here on the 4-hour chart in a triangle, which seems very likely that it's going to be resolved to the downside. But the Kiwi specifically, here it is breaking below this flat bottom triangle. Currently testing that spike low. Looks like it's on its way lower. 63 is the 161.8% extension of this little rebound. Looks like a decent next target. And here's the chart I was talking about before. Here is the breakout in the Aussie Kiwi. Aussie Kiwi remains very decently bid. I was exploring the possibility that this move was an ascending wedge. So far, we've been overthrowing it, and perhaps it isn't. Perhaps it's some kind of a leading diagonal. Who knows? We're going to see. But Aussie Kiwi looks quite healthy here. Coach, do we have an interview?
I think we do.
Yes, Steve, we do.
Okay.
I'm just waiting for to see Marco Byrne. Are you in the house? I have all the marks up here. I don't see you.
I'll go over the gold and silver until you find him. So
Okay.
we have
That's
questions.
his specialty, so go ahead. He's a gold
Oh,
guy.
okay.
He has a gold company, so
Oh,
go ahead.
Perfect.
I'd love
So-
to see gold blow one more time to the upside.
Yeah, gold so far consolidating here. Yeah, consolidating here. Somebody can say that this is a nice head and shoulders formation. You can see it. Shoulder, like a complex head, like, you know, double head here, and the shoulder. One thing is for sure, in the short-term charts, because this is a 4-hour chart that you see, this trend line, which currently passes roughly from like 1493, is quite important. If we do break below that, if we do close below that, I do think that gold is gonna start like a deeper correction lower. But in all honesty, I do view this, if it happens, like a corrective move. Same deal here with silver, you can see it. But in both cases, now let me go back to the daily chart. In both cases, I do think that there is more upside for gold and silver. And in all honesty, I know that this is, I'm going to use another Greek word, hybris, how you call it in English. Hybris is the Greek word, yes.
Hubris, yes. Yeah.
Hubris, yes. Hybris is the actual word. So this is hubris, but fundamentally speaking, and I'm not talking about short-term trading, because of course, in the short term you can get sharp counter-trend moves, but I see really no real potential for a big move lower in gold or silver.
I voted for Hubris Humphrey. Oh, I mean Hubert Humphrey in the 60s.
Steve, I think the gold and silver in the last few days or couple of weeks, they're just working off overbought conditions. Sentiment had been in the 90s.
Yeah. Sentiment had been extreme in the short term, yes.
And it's
And
now
you know,
in the
and
70s. Yeah.
And still, you know what's interesting about what you're saying is they become oversold without giving up price on short-term TFs.
Yeah.
Just by moving sideways. You have RSIs in the 30s on 1 and 4 hour time frames. So, yeah, that's a sign of a strong market.
Absolutely.
Yeah, exactly. But you know something, the fun part is that the market lately, during the past few weeks, has been conditioned in the following way. When the stocks get sold,
yeah, they buy the gold.
Gold gets bid. But that's the fun part, coach. The only way from where we are, fundamentally speaking, that stocks can move higher is with a lot more stimulus, which I don't think is going to work for a long period of time, a lot more stimulus from central bank side. So let me ask you something. Is a lot more stimulus and monetary and money supply expansion bearish or bullish for gold?
No, they could both go up, market and gold, while they're doing that, and when they're in an extreme QE.
Exactly.
But gold will outperform.
Exactly.
That's what I think is going to happen.
And don't forget the following: the only let's say argument against gold has always been what we call opportunity cost.
Yeah.
Exactly. Where are real rates at the moment, and where are they headed? Yeah. So, you know, with real rates being roughly at 0 and probably headed deep to negative, what is exactly the argument against gold?
Yeah, the only argument I could come up with is if things really get ugly and there's a liquidity issue, that people will sell whatever they have to raise cash. So, I mean, if things get real ugly to the downside, you know, people might liquidate gold to meet margin calls.
The vast majority of bullion quantities are not in the hands of
they're in central banks.
People that are going to be selling a gold chain and
stop talking about me and my brethren. And Mark is here, so I mean we could. Okay, this guy really knows gold. Okay,
perfect.
He's like
I'll be very interested to hear his point of view.
Okay, so thank you, Steve Dale. Thank you for letting me interrupt you all session again. Once again, you know, just my MO. Mark, I see you, and I'm going to promote you to panelists and then unmute you. Looking forward to our conversation. It's been quite some time. Oh, yeah, I thought
5 years,
I did.
I think.
I did the wrong guy. Hold on. Yeah, there. Okay. There you go.
Hi, Dale.
Hi, Mark. How are you?
Here. I'm great. Yeah, how are you?
Good. Gosh, it's been half a decade, you said, since you
Yeah, I
and
think
I've
it's
had a
5 years.
conversation.
Yeah, I think it's 5 years since we spoke. So,
Oh.
how you been?
Good, and you know, great time to be talking to you, Mark. Are you gonna be sharing your screen, or you want me to share mine?
I can share my screen. Yeah, I'm just trying to get
Okay.
the. I'm
There's a
hitting the
little
start.
green box that says share on it, and
Yeah, there's a
you
little
click it.
green button in the pop-up menu that says share.
Perfect. Yeah, I see it there.
It's going to ask you if you want to take the screen from me. Go ahead and say yes, and then it's going to ask you to choose the screen you want to share.
Yeah,
If you have one.
perfect. Perfect. Done.
Okay, there you go. All right, so let me see year-to-date relative performance. Interesting chart. So you know, it's been such a long time, Mark, that maybe you could just give a quick, brief bio about how you gravitated towards sound money, hard money, and develop Gold Core and your gold business, and you know, how long have you been doing this?
Yeah, very good. Well, thanks again for having me on. And yeah, it's 16 years since the company was set up, so 2003. And basically, I got into gold. Well, I studied history in Dublin, and my degree was in history. There was a lot of that was looking at the Roman Empire, the Greek and Roman Empire, and the collapse of civilizations. So, and within that, you see that the collapse of empire tends to be associated with currency debasement. So I sort of acutely aware of that. And then in the late 1990s, I was bought Irish property that was doing very well, and property went up 3 times, 4 times, like just small things like apartments. And I realized that this is a massive outperformance. And you see throughout history, markets tend to get returns of 5, 6, 7, 8% per annum. And when you see outsized returns of 20, 30, 40% per annum for a period of time, it's probably a sign that it's a good time to take profits. And particularly in a market like the Irish property market, it's not exactly the S&P 500.
So were all the realtors drinking Guinness during that bubble, or
you
what?
better believe it. Yeah.
Huh?
And the bank, you better believe it. And the bankers, and we were partying like it was 1999.
and it was.
Yeah, it was every single year up until 2007, 2008, when the whole thing collapsed.
Remember back in 2000, because I remember I started, I liked gold, and we came down from, I don't know, 500 to 2 into the beginning of the millennium, and people were saying gold, it doesn't work anymore, it's an archaic relic, it's really a paperweight. Do you remember what people were saying in 2000 about gold?
Oh, I do, absolutely, yeah. And there was only a few contrarian people who were covering it, and I like to credit one guy who actually got me into it in quite a big way was sorry, I just rewind. So I started saying, right, the property markets even then, not in 1999, but by 2002, 2003, they looked a little bit overvalued. So I started selling. Obviously, September 11th had happened. There was a lot more geopolitical uncertainty in the world. The Nasdaq bubble had burst, and it wasn't just the Nasdaq bubble. Stocks in general, the S&P 500 fell 50% from 99 2000. So
the .com.
Yeah, exactly. Well, people talk about the tech bubble, but there was a wider bubble in the wider stock market. But so I started buying gold coins and gold bars myself in a private capacity, and I couldn't buy it here in Ireland. I had to buy it from in London, or I had to buy it in the States. And when I bought from the dealers in both the UK and the US, I found that their websites were very, very poor. The customer service was poor. There seemed to be a lack of understanding of what gold is as a hedge, as a safe haven, a store of value, and they weren't sort of educating people. Exactly as you were saying, there was all these negative stereotypes about gold and misinformation about gold as a barbaric relic, and it's from the past, and only unsophisticated peasants in India buy gold type of thing. Meanwhile, the central banks of the world maintained their gold holdings, and some were beginning to look at gold again, you know. So anyway, so I realized, okay, well, I've bought gold, I own gold, that's great, but there's actually an opportunity here to set up a business. So I set up the business 2003, and yeah, we slowly grown it. My partner Stephen Flood came on board, and we sort of complement each other quite well. He has a background on Wall Street and in finance and trading, so he's good on the finance side, he's quite good on the tech side as well. And then I was doing more of the research and so the education piece about educating people, because there was such a lack of an understanding of what gold is, you know.
Why weren't you allowed to buy gold in Ireland? Was it illegal?
No, it wasn't. No, it's interesting. It wasn't illegal, but there was VAT, very high levels of VAT, value added tax, from the foundation of the state in 1922. That's exactly it. So our tangible asset of choice became property, the land, the field, and because of our colonial past, recent colonial past with the British elites, we wanted our land back because they had our land. They took our land off us, and we wanted that land back. So we have this massive affinity for the tangible asset of land and property. And as I said, that became our tangible asset of choice, because straight away you're down 20-25%.
You know, they can't print land either.
Well, that's exactly it. Yeah, so it's a good store of value as well, you know. And so Irish people like there's no culture whatsoever of investing in gold. It's also, I think, we never had much money in Ireland. We were a poor agrarian nation for most of our history up until the late 1990s, early 2000s, when the boom started. So there was never, if you don't have money, you're not trying to protect money, you know. So there's no culture of wealth preservation. We were always trying to make money, not preserve money. So in older wealth economies, such as yourselves over in the US, obviously, in Switzerland, in Germany, and Austria, these older wealth economies, people traditionally would buy gold, particularly wealthier people, because they want to protect their wealth. So we didn't have that culture in Ireland whatsoever. So it was a long, hard trudge, I suppose, but we've made steady progress over the years, and we've grown now, whereby we've clients in 140 countries, still mostly Ireland and the UK, but we've got quite a large amount of US clients as well, and we've clients, as I said, 140 countries. We've done $1 billion in sales as of last year.
Congratulations.
Benchmark, yeah, that was a milestone for us, which was great. And our assets under management, while most of the market was struggling in recent years, because it was a tough time in the gold market, particularly 2013, when gold prices, we might look at it now, but gold prices fell 20-30% in 1 year, you know.
Yes.
I got the tail end of your discussion there about why gold might fall, you know. We might get into that. But most of our competitors were struggling, and we've actually been growing assets about 20-25% per annum. So what we do is we're brokers. We broker gold coins, gold bars, silver coins, silver bars. We make a market, very competitive prices, particularly in volume. But what we specialize in, basically, gold is a safe haven asset. History shows that, recent history shows that, and all the research shows it as well. It's amazing how the media completely ignores this, and the Paul Krugsmans of this world, and the so-called financial experts, all the academic research, when they crunch the numbers, both academic research and independent research from asset allocation experts, so the likes of Ibbotson and Mercer, big pension fund advisors, they've all crunched the numbers, and they all say gold is a hedge. Gold goes up, as you guys were talking about, gold tends to go up when stocks go down, you know, or bonds go down, and when there's risk in the world. So it's a hedge, it's a safe haven asset, it's a store of value. So, but it's only a safe haven if you own it in a very safe way. You know, you buy a gold ETF, you are buying shares in a trust, and you have a huge amount of counterparty risk in terms of the custodians.
Right. Right. So, so you specialize in showing people how to hold it besides a coffee can buried in their backyard.
Yeah, exactly. I mean, they can do that if they want to do that, and a lot of people do both. Actually, you can take delivery, and there's no harm for small amounts if you feel very secure in your own home. But yeah, no, we specialize basically allowing people to own gold in the safest vaults in what we believe are the safest jurisdictions in the world. So the most popular jurisdiction with our clients, and indeed with high net worth around the world, continues to be Switzerland, and particularly in Zurich. And just the Swiss are very conservative, and they don't have that much debt, and there's a lot of respect for private property. And they survived World War II and Hitler on their doorstep, so I think they'll survive Brexit and the trade wars and all the risks that we have today, you know. But Singapore is quite popular. Hong Kong was popular. A little bit nervous has crept in about Hong Kong recently. So that's basically what they'd be the primary. Yeah, exactly. Well, yeah, I think there's a lot of political risk, but I don't think the Chinese government is going to confiscate gold there anytime soon, because if they do, they'll destroy their own economy and all the progress they've made the last 50 years, you know.
Okay, so, interesting insight. So, let's get to some of your thoughts on the market here. I mean, you started off with it being unusual for someone who's in the business, a believer in the product that you market, to be aware that gold could fall. What
Yeah.
would be market conditions that could make gold fall? Now, you know, I'm seeing right now people that didn't like it at 1100, 1200, they love it here now. I mean, now they're finding all the reasons to own gold
Yeah, yeah,
that
yeah.
they didn't see $400 ago.
Yeah.
And I think that, you know, that there's going to be a pretty good shakeout, even if silver and gold make new highs here, that there'll be better levels to buy it. Why do you think gold could correct or come back down?
Well, it's a big move up in a short period of time, and as we know, markets tend to be, you know, 2 steps forward, 3 steps forward, 1 step
Okay.
back. Yeah,
So
so
just a
I agree
normal
with you.
market correction.
Yeah, I think so. I mean, we were up, as you can see in the table there, we're up 17.6% year to date. So we're outperforming the S&P year to date. But it's interesting if you look at the over 12 months. Gold has actually significantly outperformed stocks and bonds, and this is to me is a more interesting and more important relative performance chart, because you can see here gold is up 25% over this 12-month period, but the S&P 500 is only up 2.5%, and you can see the Euro stocks are down. The DAX in Germany is down 4.5%. The Nikkei is down 7.6%. So it looks like, I think you alluded to this recently, Dale. It looks like the stock markets globally are beginning to roll over. You know, and I think the smart money is taking chips off the table, and they're reducing allocations and they're increasing allocations.
This is the first time you could show a chart like this, a 12-month period in many years, isn't it?
It is, yeah, exactly. Yeah, where gold outperformed, absolutely, yeah. So why could gold correct? I mean, you're up 25% in 12 months. You know, so you're possibly due to correction, but particularly in August alone, I think we're up 8%. I can actually show you that. So one month. This is finviz.com. They're very good. I really like their these relative performance charts in particular. You know, and then they give little snapshots. You can even look at it on a daily basis. You can really get a feel for what's happening in the markets very quickly. So the 1 month, so gold's up 5.5%. In just literally the last 3 weeks. So, and then you can see that in, this is the chart here. So this is gold in US dollars. This is from our website. We have a chart section looking at gold in euros, pounds, dollars, and Australian dollars. So over 5 years, you can see there's a big breakout here. And I think we
that's when you called me. You wanted to go on. I figured it was because you saw that 1370 breakout. 1360 breakout in.
Well, the mood music has changed, as you alluded to, and we're seeing a lot of investors come back in. The smart money who actually bought before the last crisis, who were buying in 2004, 2005, 2006, they're coming back in now. You know, so when you look at that chart there, you see there was a lot of resistance around the 1350 level. So quite possibly could go back down to the 30, and then there was a lot of resistance around the 1400 level, and then we went through it very quickly. So I do think most probably you would expect it to correct back down to the 1350 to 1400 level. You see it probably more clearly over a 1 year.
And I mean, that's a big move. How would you explain the dollar being stable? Because, you know, a lot of people correlate gold to currency, especially the reserve currency. Dollar really not having been weak. I mean, the euro's scraping against, 52-week lows. Cable is. So dollar relatively stable with a higher gold price. And with the dollar being the strongest currency out there, and gold appreciating against that, isn't it really a true bull market when it's appreciating against everything, every fiat currency, and that's what's going on?
Yeah, absolutely. And we do tend to, so we don't, but the media does tend to focus, and most analysts tend to focus gold exclusively in dollar terms. And obviously the dollar has been very strong in recent years, so one of the strongest currencies in the world, obviously. And that's contributed to gold's underperformance. But that has very much changed in the last year. And gold has actually hit all-time record nominal highs in most fiat currencies in the world. So in British pounds, obviously the Brexit survives, and the concerns about the UK economy and the amount of debt in the UK, sterling's come under huge pressure. But it's also gold is at record highs in Canadian dollars, Australian dollars, the Chinese yuan, the Indian rupees. These are some of the major economies in the world, and people are buying gold in these nations because they're worried about the economic outlook. They see their own economies beginning to slow down. Obviously, you've got the trade wars, you've got the headline risk in terms of geopolitical uncertainty. uncertainty, between tensions with the US and the Western world has tensions with Russia and China, and obviously that's the issue in the Middle East with Iran. So there's a lot of sort of potential banana skins there, shall we say?
Could that also be a double-edged sword, Mark, in a way, because central banks, China's been a huge hoarder, accumulator of gold, as well as Russia, and if their economy does turn south and they don't really have the reserves they need to support the yuan, even though they're going to let it go, as weaponize it in this trade war, is it possible that Russia or China, because they may be under financial duress, say oil for Russia falls back under $40, that their central banks could unload some of the gold that they've been accumulating over the last 5-10 years?
Yeah, it's possible, but I think it's unlikely in the short and medium term anyway, because the amount of gold they have relative to their foreign exchange reserves remains very small, in dollar terms, and also the amount of gold they have compared to, say, the US is obviously the biggest holder of gold in the world at around 8,100 metric tons, followed by the Bundesbank in Germany, the Italian central bank, the French central bank, all of which are around the 3,500 metric tons mark. So I think the Russians are up to about, we actually cover this, we do a daily market update that is one of the most followed market updates in the world. We have a huge amount of subscribers to it. Yeah, and just today, actually, we looked at the Russians announced yesterday that they bought another 300,000 troy ounces in July, and that brought their reserves to 100. Their gold reserves are now worth $101.9 billion.
You mean Putin's gold reserves, not Russia's, right?
Well, potentially, yeah. Putin and the oligarchs surrounding him, potentially.
They're pretty long right here. So, I remember, I'm like an elephant. I remember when we were talking, I think it was right after the bail-in that we had in Cyprus. Okay, and you really keep your finger on the pulse of banking situations, and we all know that Deutsche Bank is a basket case. And I'm wondering if that was the most publicized bail-in. We really haven't had, and some pension funds, it's happened in Poland, but do you see any type of draconian type of measures that might happen in Europe, especially with what's happening in Italy and Deutsche Bank and the Eurozone in a whole, where there could be some type of bail-in or some type of banking problem that could lead to the next leg up in metals?
Yeah, I do, and I think you're right to look at Deutsche Bank because their share price only last week hit an all-time record low. I'm sorry, today I think it may have gone. So that's the 5-year, and you can see that there, the 5-year in Deutsche Bank.
Yeah.
That's 5 days. Oh yeah. So the record lows was last week. I think it was last Friday around 582. So it has had a little bit of a bounce there. But yeah, I mean, Deutsche Bank is, I think it's the biggest bank in Europe. Commerzbank is also in a lot of difficulty, which is another very big bank in Germany. And there's talk of a forced marriage between these two banks, and Deutsche Bank has a massive derivative position as well. But there's issues with all the European banks, the Italian banks in particular, but, the French banks, so the UK banks, the Irish banks. Unfortunately, we all know that expression, we kicked the can down the road. We all used to use that expression 5, 6, 7 years ago. And then we forgot about it, but we did kick the can down the road at some stage. The fundamentals of the amount of debt and the amount of liabilities in these banks has not been resolved, and therefore I do think that when you see that share price moving like that and going to record lows, it means that the investors out there just don't trust that bank. So, and then as you said, the bail-ins that's in legislation in the European Union, it's in legislation in the UK, it's in legislation in the US in terms of the FDIC, the Federal Deposit Insurance Corporation. So in the next crisis, the depositors will suffer haircuts, and there are deposit guarantees in most countries. I'm not sure in the US. You $250,000, is that your deposit?
I believe
guarantee?
that's still FDIC. Yeah.
Yeah. So and what's interesting is, so in Europe, in Ireland and most European countries, is 100,000 euros is the deposit guarantee. So the state is saying that you are safe once you won't, anything above 100,000 can be bailed in and confiscated, basically, in order to bail out the banks. That's what a bail-in is. So
right. People don't know that once they deposit their money into a bank, it's really not theirs anymore, is it?
no, exactly. And today you're not even getting any, and you wouldn't mind if you got some return and you got some yield. So you're taking risk with money in the bank, and you're not getting any return. You're not getting any yield, you know. And
Try and take some cash out of your account too.
Oh,
You
I know.
that,
We have.
I
We have
mean,
clients every single day. We have stories from different banks around the
Yeah.
world making life difficult for people.
Yeah.
And that's in a good economy. So you can imagine in a bad economy when these banks are under pressure, what's going to happen?
Yeah, I mean, I wanted to cash rather than deposit something, and they didn't have enough cash in the bank. It made me think, that's just me. You have to order the cash. What if 100 people? I think Jim Rickards talks about the ATMs being empty one day because it's all digital dollars. So anything you see on okay, so we're looking at Deutsche Bank. Anything on
We actually covered that last Friday.
Okay.
But what's interesting what you say about Jim Rickards, and he's very good, very astute. A guy that I had on last week, or it was probably 2 weeks
Jim
ago.
Rogers?
Jim Rogers, and he was fascinating because he was telling me he buys gold coins, silver coins. He doesn't trust the banking system. And what was interesting as well, he got into where he stores his gold, and he lives in Singapore, so he has gold stored in Singapore. But he also likes Switzerland too, and he said that the generals and all the elites have their gold stored in Switzerland. So if the elites have their gold stored in Switzerland, they're not going to destabilize Switzerland. They're not going to invade Switzerland. They're not going to bomb Switzerland. Switzerland is the most neutral country in the world and continues to be, and it's not part of the European Union. It's barely part of the UN, even though the UN part of the UN apparatus is there, obviously in Geneva, So electronic money and paper money, it's crazy. They just go on a keyboard. The Federal Reserve needs to be, and they will control P, and they will create hundreds of billions and trillions of dollars, euros, and pounds. And as you said, that's just electronic things that we get out on the ATM and we use in day-to-day transactions. Exactly, it's digital money. It's no different than Bitcoin or cryptocurrencies.
Okay, you brought it up.
Psycho currencies, as Mark Mobius called them yesterday.
What do you call them?
Psycho currencies.
Psycho.
Rather than cryptocurrencies, you call them psycho currencies, which I think is a bit harsh, but it was an interesting point he was making.
Blow up the argument of the commercial saying, why drag around bullion when you could own digital gold, which is Bitcoin?
Yeah, well, Bitcoin is around for a very, very short period of time, so it hasn't proven itself as a store of value as of yet, and who knows, in time it might well do. But as you said, it is also digital, so you have a huge amount of risk in terms of where you buy the Bitcoin, how you on what exchange the exchange gets hacked, the owners play silly buggers, and I am. Yeah, can you hear me?
My internet connection is unstable.
Okay,
it was me. Okay, so go ahead.
No worries. Can you hear me?
I can hear. Yeah, go ahead.
Yeah, so you're just saying that Bitcoin, when you buy it, you have a huge amount of intermediation risk and counterparty risk, because you're buying from these exchanges, many of which have been hacked, and founders have disappeared with people's holdings of Bitcoin. So you can own Bitcoin obviously on Trezor wallets and take it off the exchange, if you will. But then it's who are you going to sell it to? And in worst case scenarios, that some of these people believe in, that the system is going to collapse, then as you alluded to in terms of ATMs, one of the biggest risks is actually on the electricity side, because if you don't have electricity for a period of time, then you don't have Wi-Fi, then you don't have websites, then your Bitcoin is no use to anybody whatsoever, So I think I think it's great. I own a little bit of Bitcoin, don't get me wrong, I'm not anti-Bitcoin, and in time, who knows, Bitcoin, to me it's binary. Bitcoin will go to zero or it'll go to 100,000, 200,000. So if you want to, you can speculate and own a small bit of it, but you shouldn't see it as a store of value. It is, at this moment in time, it's a really exciting technology, and obviously the blockchain behind it is what's really, really exciting. But then the other question is, which cryptocurrency is going to survive? I mean, it could be it could be Litecoin, it could be some the Bank of England. All these big central banks are testing their own cryptocurrencies. Obviously we have Facebook come on the scene now with Libra, so potentially Libra could become the cryptocurrency choice. And then there are conversations we have with companies about making a gold cryptocurrency, and whoever I think cracks the nut of an actual, a proper, safe, fully backed, fully segregated ownership of gold via cryptocurrency, a gold cryptocurrency, I think if that gets mass adoption, then I think that will become the cryptocurrency of choice, and that poses risk to Bitcoin as well. Okay. So yeah, it's in interest space. I keep an eye on it because the bottom line is the current monetary system, fiat monetary system, is a giant Ponzi scheme. It's a giant experiment they're engaged in. Lord Rothschild, the Rothschilds, the scion of the Rothschild family has said that
we're reserve banking system, fractional reserve.
Yeah, fractional reserve banking system, and also the fiat monetary system. And he's basically said that what the central banks are doing in the last 10 years is a giant monetary experiment, and it won't end well, So this is one of the wealthiest families in the world, and the smart money knows this, and that's why they're preparing for the next crisis.
Okay, so let's say the next crisis hits. This is I want to wrap it with this. Okay, next crisis hits. There are currency controls, all kinds of draconian controls that happen here in the U.S. I put $250,000 into gold that is stored in Switzerland or one of the other banking relationships that you have. How does it help me if I can't do anything here in the U.S. and I'm stuck?
Well, you should take delivery of some if you feel secure in your own home. And we always encourage all our clients to have some gold in country, if you will, to protect against exactly that scenario that you've said there, that, it could be exchange controls, it could be capital controls for a period of time. So, and then if there's a systemic crisis whereby the grid goes down for a period of time, the next generation of warfare is EMP, electromagnetic pulse, which will take out grids. And if you take out an electrical grid in New York or London, the market's going to be closed for a period of time, So yeah, so if you feel secure in your home, as I said, take delivery of some gold, own gold near you. If there's a depository near you in the state or near the city you live, or there's a safety deposit box provider that you see is very secure, maybe potentially own some gold there. And then the beauty of owning some gold offshore, Switzerland is obviously very, very safe, as I alluded before. So what would happen in that scenario, in that worst case scenario, is if you've gold in Switzerland, it's highly liquid. You don't have to go and pick it up and bring it to a provider and try and get your cash. So you would sell either online with us or on the phone with us, providing you can get us, and most probably will. But if you couldn't do that, then you can actually fly to Switzerland and you can actually go to the vaults with your rent-a-car, and you can actually collect the gold out of the vaults, and you can drive into Zurich. So you can actually transfer it into, most of the big bullion dealers and bullion banks in the world store in these vaults in Zurich. So you could transfer your gold to another bullion dealer, bullion broker, and you could get cash. You could set up a bank account in Switzerland, or I don't know if they'll be handing you cash, Swiss francs, over the counter.
Yeah.
But so you have that liquidity in those worst case scenarios, And so I just think it depends on the individual. If you've never been outside the United States, you're not a big believer in traveling and all the rest, then it's probably not for you. But if you do see the benefits of potentially, in the worst case scenario, people have second passports. People consider having residences in foreign jurisdictions and owning assets in other jurisdictions. So you're not concentrated with all your assets in one country.
Yeah, Doug Casey talks about that all the time.
He does indeed, yeah. He's very strong on that. And Bill Bonner, who is one of the guys, these are the guys who educated me back in the early 2000s, and they're smart guys. And people might sneer them in recent years. They've been wrong because of the scale of the recovery, but it's totally artificial based on the printing of currency. It's not sustainable, and therefore they'll be proven right again,
Well, I'll tell you what, Mark, let's not let half a decade pass again. And everyone that's still around and then watches the video later, Mark, it'll be out on Twitter in a few hours. Mark is a great resource.
Tweet it and retweet it.
Yeah, Mark is a great resource for knowing how to diversify into gold, silver, all precious metal products, physical. Great source on his website for content about the metals and what's going on. And you could tell Mark is very much aware of what's happening to the global financial system, and looks like you have great guests. So maybe you could do me a favor and ask Jimmy Rogers if he would do an interview with me. So
I will. I'll do that for sure.
That would be a feather in my cap. So look, you have Mobius, you have all these guys, Mark. No,
I didn't have Mobius. Mobius was on Bloomberg, but I'm going to reach out to Mobius. He'd be a good guy to have on. Yeah.
So it was an enlightening discussion, and Thank you so much. You're my trading warrior brother, Mark, and I'm so glad you reached back out to me. And I'd like to have you on more frequently, at least 3 or 4 times a year, to keep our community updated.
Very good. Yeah, no, I'd like to do that, and I look forward to doing that with you, Dale. It's good to touch base with you again.
All right. Well, thank you for edifying our community today, Mark. Good luck, and thanks again for your time. And may your business continue to grow and hit new benchmarks.
You're very kind, Dale. I really appreciate that. Thank you.
All right, everyone. That's a wrap for us today. And remember, most of all, don't just count your pips or coins or bullion bars. Count your blessings. You're very welcome.
So true. So true.
And we'll see everyone tomorrow. Thanks again, Mark.
Thank you, Dale. Take care. Bye-bye.
Adios.